Your current life is a summation of your past daily thoughts and habits. My friends, not about those positive affirmations alone. It's about the positive things you do to make them happen. And each and every day, 10 to 15 minutes, that's all you need to spend in the markets, charting stocks and ETFs, your favorite ones, and practice trading them. And again, the man who perseveres can conquer all, just like water over time tears down the biggest, strongest, tallest mountains. You'll do the same if you will just concentrate your efforts. You can do this. Let's jump into these charts. We see stocks, Bitcoin are up for the day. Bonds and gold are down for the day. Let's jump first into the S&P 500. We told you yesterday 75% bullish directional probability over the next 5+ days, 80% backtest accuracy. Well, boom, my friends, up another 1%, 1.03% today. And where does that leave us? Well, our consensus is we see strong uptrends across all time frames, though short-term consolidation is visible. And the probability of continued up movement, like I said, yesterday was 70%. It stays at 70% today, 80% backtest accuracy. We now see about another $12.18 of possible upward move before we hit some real resistance at about the $611 mark. We're currently at $599.14 as we closed for the day. And again, we'll just continue to push along and watch this market just keep on moving up. I have a red line on the chart here that shows where our prior top was after things bled off a lot of energy as they continue to build back up. Now remember, exogenous events can occur. You could have something terrible happen, war breakout, political assassinations, bombings, crime, insanity occur, a tsunami, an earthquake, any number of things that could disrupt markets. And when that happens, of course, what's happened in the past and what we see in the charts can radically change. That's why you've got to learn how to jump into the markets, when to stay in, how to take profits, when to get out, all those kind of things. You can learn those in my latest book. That is Three-Wave Trading Advantage. You get it as a Patreon member. Any of the 3 support levels. Support us if you appreciate what we do here, giving all this out to you each and every day for free. Let's keep moving. We go from the S&P 500 to the NASDAQ 100. It was up right at 8% for the day, higher high as we continue to move up. And again, approaching that previous high that we hit. We hit it a couple of times, 3 times just about there. Starting in December, mid-December, then we saw it in mid-February, then we had things bleed off and turn around, rocketing back up. Where are we on the NASDAQ? Well, yesterday we told you we're 70% bullish over the next 5+ days, 80% backtest accuracy. We're still at 70 and 80. We see about another $8.50 up movement till we hit some real resistance around the 538.28 mark. We are currently at 529.92 as the market closes. I will tell you where our consensus is. Uptrend across all time frames, short-term consolidation. Probability of continued upward movement, like I said, is at 70%. So we are, as we leave this week and go into next week on stocks, we are positive, we are bullish, and we are staying in that trade that has been so good to us. Again, things can change. We're not a stock calling service, bond, gold, or Bitcoin calling service. We're an education firm. I want you to practice with us. Let's jump into these charts. Where are we on 20-year U.S. government bonds? Well, yesterday we were bearish at 85%. I told you I was having some questions about that, wanting to see how the week ended because we had a green spinning top here. It's now it's with the down move today at 1.27%. It has gone into a doji, second doji in a row. This one looks like it's probably green instead of red, but it's still a doji. Average volume means lots and lots of indecision. But where does that leave us? We are going from just the same result from yesterday as today as we move into the new week at 85% bearish, 83% backtest accuracy. All that remains the same. We see things again continuing to move in the downward direction. We've got some resistance at the $84 mark. We're currently at $85.35. Now, those of you who are new to what we do here, you might be saying, Tom, why would you be buying something that's going down? Well, that's a good question, and those of you who've been here long enough, you know that indeed that's not what we're looking to do. I don't switch charts when we're going into inverse funds, but as I say on the show all the time, TLT's opposite, and again, there's others, but the single short, the single inverse fund, Tango, Bravo, Foxtrot, that is the ProShares fund. It's called the ProShares Short 20 plus year. Look at it. As things have been going down, it's been going up on 20-year U.S. government bonds because it's a single inverse. Now, we've got a great training on inverse funds. I'll put it at the end of today's video. Now that I'm talking about one, you'll understand them more. You want to practice trade them, get a feel for them, see if you actually like them. Some people love them. They get in for short-term stuff and get out. The fees are higher. They're revalued on a daily basis. They can magnify losses if you don't know what you're doing. So that's why you practice trade them, to learn what you're doing and to see if you like them. Of course, one problem you really have here where it bounces up super strong for a week and then deteriorates for you over the next 2 weeks is holding them can really eat you alive. That's why you've got to practice them to see if you like them. But we are still short. Again, I'm not super strong on it. Our numbers are super strong on it. We'll see as this next week continues to develop. I am looking at some kind of bottom I think is forming here, and I'm waiting for a nice green spinning top that I had yesterday that deteriorated today with another 1.27 down move. You can see here where things were up for 2 days and then really crashing over, almost eating all that up movement back, clawing it back as things crashed down. So that's where we are on bonds. Let's move to gold. Now, you know, gold, again, hit this high back on the week beginning the 21st of April. Then we had a doji week, sort of a green up week the following week, then down the week of the 12th with average volume, and then trying to build up over the last few weeks, down 1.34% for today, actually moving all the way back down to that. It's not much of a trend line, but it's the only one we have, and moving right back down to it. A doji we see for the first day of the latest 2-day candle. That'll finish drawing on Monday, and not a lot of strong volume there. Didn't hit average volume this week. Last time we had average volume was on that red down week going back to the 12th of May, beginning then. So where does that leave us on gold? We are 65% bearish. I'm sorry, 65% bullish on gold. That'd be 45% bearish. We got a 67% backtest accuracy. We were exactly the same yesterday. And of course, what is that? That's more than a coin toss, but 45.65. Am I going to be throwing my money, albeit in a practice trade that we talk about, on something as weak as that? No, I'm not, particularly when I look at this chart. It's just languishing around. Yes, it moved up some this week, hadn't reached the high of many weeks ago back in April. Again, not super excited, not excited about what I see on the 2-day nor the half-day. So again, keeping the powder dry when it goes to gold. Are we technically bullish? Yes. Am I excited about it? No. That's where we are as we end the week on gold, down 1.34% for the day on Friday. Now, Bitcoin crashed through, I would call it, this week with again, a spinning top after 6 weeks of strong up movement, even higher highs going on now 3 weeks ago, the week beginning the 19th of May. And we see 6 days worth of 2-day down candles and a doji forming on the latest 2-day candle, first day of it. And of course, you can see where things popped up some. And again, most things, if they went up 2.39% for a day, you'd be just jumping up and down. For Bitcoin, not a big deal. We saw it pop up back on the morning and afternoon of, well, I guess that'd be the morning, and afternoon of June the 3rd, Tuesday, June the 3rd. And then what did it do? It then just rolled back over and then popped up on the morning and afternoon of this Friday, June the 6th. So again, it's below the prior trend line on the 2-day and the half-day and the weekly. So we've got weakness there in Bitcoin. Could it pull things back out and move back up again? Yes, it could. What typically happens after you hit these highs, things roll off, people take profits, then they move back up again. Appears to be what's going on now. Technically, our numbers are showing us a bullish 60%. That's a little bit more in a coin toss. Backtest accuracy, only 60%. So again, what are we doing? We're keeping our powder dry right now on Bitcoin. That is where we are, my friends. After a week, we so appreciate you being with us. This Market Compass Weekly that we do at the end of each and every week. Thank you so much for all of our Patreon supporters. If you're not one, become one. Immediately get my new and latest book, an e-version of it. That is one of your gifts right away, along with the 3-part series, Options Made Simple, The Charting Wealth Way. You want to learn options? Well, we got a way. It's simple, it's understandable, and you can start practicing it next week. God bless, my friends. All the best from the whole team at Charting Wealth.